Alright, this weekend market analysis is for the 3rd to 7th of July 2017. It is a brand new week, in a brand new month of July 2017. Price should begin to push in their normal momentum as we kickstart this fresh month. Alright, without any waste of time, let's look into the Forex factory economical calendar to see those high impact news events that are scheduled for this upcoming trading week. As you can see on my screen, we have quite a lot from Monday to Friday. We have so many high impact news events that are scheduled for this upcoming trading week. That means it's going to be a very busy trading week, as price will be shooting in heavy momentum as these news announcements are being pumped into the markets. And as traders, we want to keep all of these high impact news events on our calendar, on our notepads, really timing when they will be released for us to be careful with our trading. It's either we avoid taking the trades or we trade the news with our news trading strategies. Okay. Alright, so even within these high impact news events that are scheduled for this week, there are some specific ones that even long-term traders have to be careful about. Aside from the bank holidays, alright, aside from the bank holidays, long-term traders should be careful trading the market on interest rate days. Whenever the governor of central banks are speaking, you want to be very careful. Okay. All right. As you can see here, for Monday, the Bank of England, Governor Carney will be speaking. So you want to be careful trading all sterling pounds crosses within this news release hour on Monday. Okay. Alright, if you go down again, you will see that we have interest rate announcements for the Australian dollar. You want to be really careful trading these interest rate statements. That statement will be coming out on Tuesday, so you want to really avoid trading all Australian dollar crosses before this news release hours, regardless of whether you are an intraday trader or a long-term trader. Alright, another powerful one is the FOMC meeting minute. Of course, you should be aware of this, that this is a heavyweight, high impact news announcement that usually rocks the market, not minding the kind of trader you are. Okay, so FOMC meeting will be released on Wednesday, the 5th of July. You want to be careful trading all American dollar crosses on Wednesday before this news release hour. Alright. And for the American dollar, again, this usually also spike the market. The ADP non-farm employment change, you want to be careful trading that as well. If you also scroll down, let's just take a little scroll to the downside. All right, you will see that we have G20 meeting on Friday. This usually slows the market as the G20 members will be meeting on Friday. It is an all-day event, but then for we hector traders, we will be trading the non-farm payroll. All right, the non-farm payroll, the non-farm employment change. This is one profitable event for us, so we will not miss that on Friday. Okay, and if you lack absolute knowledge about news trading, then you want to completely sit out of the market for this Friday. All right. This Friday is going to be a volatile Friday, so you want to stay out completely. Okay. All right. Unemployment claims also there can spike the market. You have Governor Carney will be speaking again for the sterling pounds, although that is tentative. Then you have a final one, monetary policy report for the American dollars. These are very highly volatile news events that you want to really pay attention to. If you are a news trader, just like we do, then these are all potential trading opportunities for us, because we will be trading the market live in the live trading room. Okay. All right, having said that, let's now look into the charts and see what we have waiting for us. All right, there are just so many pairs to discuss about in this weekend market analysis. So we are going to be hitting the nail right on the head. No waste of time. We are just going to be stating what directional biases we are going to be trading and what we are watching. Okay. All right, let's get going. First, and as usual, is the euro against the American dollar. Remember, last week we analyzed that the optimal directional bias remains to the upside, and the price has proven that as of last week. We saw that heavy momentum push to the upside. Right now, sitting at our level of resistance that we have been watching. All right, that channel leg has been retested. We are all waiting to see what is going to happen around that level of resistance. For now, there is no rejection. The romance with that level is just too high. The bulls are still looking powerful, and it seems a price might be pushing above that level of resistance. Our advice here is that you don't want to go short. All right, you don't want to go short because there is no hint, and you don't want to go long because price is challenging that level of resistance. For you to go long, you want price to break above. Once price is sitting above, you have the green light to begin to search for your long opportunities based on the trading strategy that you are trading. Okay, and for you to go short on this pair, you want to see enough confirmation price action that will be giving us the hint to trigger our short entry. But for now, I repeat, there is no hint. Price is just right there. You don't want to take any trade. You want to sit flat on the euro against the American dollar, wait for price to give the right signal before you want to jump in. Based on our trading strategies, we don't have any valid setup here, regardless of the fact that price is sitting around resistance level. We don't have any valid setup for us to trade yet. Okay, so we will not jump in blindly clicking on our sell button. If you do that, price, like I said, the bullish momentum is still much. Price is very likely to keep pushing to the upside and hitting your stop loss. All right, so that's a note of warning there. Do not trade the euro against the American dollar for now until we know what price is going to do to that level of resistance. In the daily time frame, you can see how we are even having a small pullback candle, so price is very likely to keep pushing to the upside in this pair. So you want to sit flat for now, wait for a valid setup. For intraday traders, of course, we'll be discussing that live in our live trading room. All right, the next one is the sterling pounds against the Japanese yen. No need to waste your time here. You only need to keep an eye here. Price is approaching a heavy level of resistance. This is a key level of resistance in the sterling pounds against Japanese yen. It is almost there. So for intraday traders, if you take a buy entry, you want to close your profit quickly because you have very small room. All right, the room there is not much before price hits that level of resistance. So you want to cash out your profit before price hits that level of resistance. For long-term traders, we are waiting to see what reaction we get off this level of resistance. If we get a breakout, we are going to be searching for continuation formations. If we get a bounce, then we'll be looking for short entries back down. So this is a level to watch in this pair. Hopefully we are going to see good price reaction for us to trade. In the daily time frame, just the same thing because there is no daily level of resistance here, but even in the daily time frame, this is a daily level of resistance that qualifies for any reversal of that level. Okay, all right, so watch that level. Whatever reaction we get, we are going to be trading. The next one is the euro against the Swiss franc. Similar price behavior. Price is around the key level of resistance. You can see how that level has been holding price for some time now. Let me actually change my color. Okay, that level has been holding price. Right now price is heading to that point again. If we get a breakout, we'll be looking for a continuation formations, and if we get a bounce, we'll be looking for our short entries. So you want to keep an eye here as a long-term trader, waiting for price reaction of that level. All right, the next one is the Australian dollar against the American dollar. Similar price behavior. This is a high tension level. You can see the number of times price has respected that level. So we are watching that level very closely, either for the breakout or a bounce. All right. Of course, we discussed this in the live trading room. So for now, you have very little room. If you're an intraday trader, you want to be careful. If you take a buy entry, cash out your profit quite early, then wait to see what reaction you get around this long-term level of resistance. Remember, the long-term charts have total control over the shorter time frames. All right, so this is on our radar. We are watching price reaction around that level. Hopefully we will find something important for next week. The next one is the New Zealand dollar against the American dollar. Remember, we analyzed this pair before. Price, like I said, had not given us any sign of the bears taking over. These are right. You can see how the bulls have struggled as of last week to even push above that level that has been acting as resistance. Okay, that is why it is important for you not to jump into the trade without getting a very good confirmation. Okay, so right now we are simply going to mark this entire area, this entire level of resistance as an area. All right, it is an area. Price is really messing up with that point, and this one here again as an area. Okay, right there. So we have two areas acting as a range. You can see how price has been swinging up and down within that point. So respect right there, another respect there, right there, and right here. This is an area that has been acting as resistance. So price is again right at a point of resistance. You want to be careful going long. It is safer to go long once price breaks above, but for now price is still sitting below, so you don't want to trade against this level of resistance. All right, you at best wait for the breakout. Okay, so we are waiting to see what price reaction we are going to get off this key level of resistance. If we get a bounce, we'll be looking for our short opportunities. If we get a breakout, we'll be looking for continuation formations, hopefully to the next level of resistance, which is the monthly level of resistance. Okay, all right, those are hot pairs, are very close to their long-term levels of support and resistance. The next one is the euro against the sterling pounds. Well, this is my favorite for this week. Let me actually zoom in this chart so you can see clearly. Remember, we have analyzed this pair before. We talked about price hugging that level of resistance for whole 4 to 5 weeks. We have gotten that hesitation. Last week candle is a more bearish candle right there. Okay, that is a bearish signal that for this week the bears are all ready to drive price to the downside. So for the euro against the sterling pound, you want to keep this as a potential short opportunity. If you click on your sell button as soon as market opens right here, you go short. You want to place your stop loss a few pips above the high of that pin bar. That should be your stop loss. Then you want to wait for price to kick you into for price to drive you into some nice profit. Hopefully if you get the first candle close, that's for this week, you want to close 50% of your profit, then trail your stop loss to entry position. All right, for a risk-free trade. Then as the next candle close, that's for 2 whole weeks, you want to close the remaining 50% of your position. Okay, All right, I am aware many of you do not know how to take out partial lots. You don't know how to cash out profit, partial profits. Well, we will be doing a video on that for everyone to know how to cash out partial profits. All right, so this is the setup. Although it is not really on a weekly level of resistance, but at any rate this level has held several times and is becoming old enough for a weekly level of resistance. So quite aggressively it is still valid for a short entry. Okay, all right, let's see the daily time frame and see what we have in there. You can also see that the last level of resistance, previous level of resistance, is becoming old, so calling for a change of this line to the weekly level of resistance. At any rate, we got quite an ugly reversal candle there, which didn't perform because price was hesitating to close as that pin bar that we saw in the weekly time frame. As soon as I saw this kind of price pattern, I was very optimistic that there's going to be a delay, there's going to be a hesitation for the weekly candle to close a pin bar, and obviously that did happen, and we are now ready to go short with this pair, the euro against the sterling pounds. Okay, all right, so having said that, let's move on to the next chart, the American dollar against the Swiss franc. This is the daily time frame. Recall that we had analyzed this pair as of last week, and I was telling you that we will have a potential channel, that we might have a potential channel. All right, no one is ever sure of the market direction, so it is not quite right to use these words will as if you are certain about the direction. You cannot use this word. All right, the market might push to the downside, and of course last week we saw that fall to the downside. I took an aggressive entry as soon as I saw that pull back to retest that point. I took my short entry, and I did related this entry with those followers on Facebook and our live broadcast room, and of course it gave me some nice profit to the downside. Right now price is at the lower limit of that channel level. All right, this is the next level of support. Do you want to go long? Well, you don't want to do that blindly. You want to see some heavy rejection of that point before you want to go long. For now, there is nothing significant here calling for a buy entry, so you don't want to go long blindly. You need to know how to read price action around these key levels of support very professionally before you want to go long. If you click on your buy button right there, price might just come back down, kick your stop loss before pushing to the upside again. For now, you want to wait. There is no signal to go long, and at the same time you don't want to go short around that point because this is our heavy support level. Okay, so hold on. Just like we are watching the euro against the American dollar, you want to be watching the American dollar against the Swiss franc. These are two correlated pairs, so wait for clear price action before you want to trade. All right, let's move into the next pair very quickly, the Swiss franc against the Japanese yen. No need to waste time on this one as well. Like we rightly analyzed, price push to the upside. Price is very close to our projected channel leg. Okay, this is our forecasted possible channel leg that price might be bouncing off to the downside. So right now you want to avoid trading this pair. Simply sit, watch what type of price reaction we are going to be having around that level. If we get a bounce, well, that would be nice to look for short entries back down. If you get a breakout, obviously price will be pushing to the upside. But at any rate, this is a level of resistance, a possible level of resistance that you don't want to go long against. Okay, all right, daily time frame really not in there. Let's look into the next pair, the Australian dollar against the New Zealand dollar. This is the monthly time frame. Obviously we are in a new month. The end of last month has come, and obviously we should be looking into the monthly time frames for those pairs that have interesting price action. The Australian dollar against the New Zealand dollar, as you can see, is a triangle formation in the monthly time frame. We have analyzed this before, and as you can see, last month closed as a doji around that level of support. That is not a strong signal anyway, but then you should not be looking for short entries at this particular area. The doji is giving us a warning, and this is a level of support as well. So you should not be clicking on your sell button right there, because you'll be clashing against that level of support. All right, this is obviously a very clear price behaviors. You only want to go short once price breaks free from that level which has been holding price as support. For now, you want to sit on the sideline, hopefully searching for intraday buying opportunities of that level that has been holding price. In the weekly time frame, really not in the daily time frame. In the daily time frame, you can just clearly see the kind of pattern we are having. I do not really believe in this trend line. All right, I don't believe in this trend line that we have two bounces there. You need to be able to distinguish between trend lines that have high probability of bounces with trend lines that are really too weak. All right, this trend line failed from the beginning. It failed right there where we had this bounce, and this one here got breached. Price came back up, messed it around. Even if we had adjusted again to the next high, you will see how that trend line is just leaning too much. All right, that is obviously the out trend line, but it is too far. I even prefer to keep it that way. Okay, for now, it is clear that price is giving us an expanding triangle range. You can see how price has been bouncing off that level. So the directional bias remains to the upside. If you are looking to take any trade in the Australian dollar against the New Zealand dollar, you want to look for buy opportunities. All right, price is very likely to turn somewhere in the air, push up again, then it might find resistance somewhere around in here for another wiggle to the downside. So the Australian dollar against the New Zealand dollar, it is best to keep searching for intraday long opportunities. From here on for this week, then you want to begin to look for short opportunities. From that point on, hopefully it is going to push back down to retest the lower limit of this triangle leg, and again for another push to the upside. These are price patterns that are harmonic and repetitive. Okay, all right, not wasting time again, let's move on to the next one. The sterling pounds against the New Zealand dollar. This is the weekly time frame. Recall that we analyzed this pair before, and we were looking for a potential trend collapse strategy, and as you can see, this pair is bouncing off the lower leg of a former trend line, which has been acting as a resistance twice, then got broken with those shaky candles, then we got the pullback again back to that trend line right here. Okay, that bounce is quite valid for a long entry. It is calling for a long entry with your stop loss somewhere right there. Okay, this is a valid trend collapse strategy. The only problem with this strategy is that price momentum was just too poor. You can see how price wiggle up and down. Then in fact this is just too poor. Personally, I know I will be involved in the euro against the sterling pounds, all right, from the weekly perspective. So I might not be taking the sterling pounds against sorry about that, what am I doing here? The sterling pounds against the New Zealand dollar, all right, because you have the sterling pounds currency right here, and you also have the sterling pounds right here. So these are two correlated pairs that you only need to trade one. Okay, so I prefer to go with the euro against the sterling pounds. Okay, against the sterling pounds. At any rate, if you take this, well, you are still in a safe side because directional bias remains to the upside, and this might also give you a better risk reward ratio. Recall that if you are trading this, your entry might be somewhere in there, your stop loss right there, your first profit target will be somewhere in here. So this is a big trade setup for those who are interested in trading it. Okay. All right, what else? Let's move on to the next pair, the sterling pounds against the Swiss franc. Remember, in the weekly time frame, we talked about this being a possible range, with this area holding price as support. And last week, the bulls were able to push price to the upside. Hopefully, we are heading to retest the next level of resistance, which is our ranging level of resistance right there. In the daily time frame, well, from what I am seeing here, technically this pair has broken free from that bearish trap. All right, there was a bear trap and price seems to have broken free. We have what was more like a triangle. Okay, triangle right there. You can see the swing up, swing down, swing up, swing down again. Then we got that breakout. Our price is likely to keep pushing to the upside in the sterling pounds against the Swiss franc. So you don't want to go short with this pair for this week. Based on your trading strategies, you want to be searching for longer opportunities in the sterling pounds against the Swiss franc. All right, next one, the New Zealand dollar against the Canadian dollar. This is the daily time frame. I don't really want to go into the long term here because price action is pattern is happening around the daily level of resistance. All right, formerly support, but now resistance. Many traders are looking to go short. All right, right there. Many traders are looking to go short, but in my opinion, this is not a good setup for us. All right, this is not a breakout congestion continuation pattern. It might push to the downside, but from there on back to the upside. What you want to see in a breakout congestion continuation pattern is a solid candle breakout. All right, a solid candle breakout, one candle. Then you want to see that hesitation candle, which can of course be any color for you to place your order. All right, this would have been a more valid entry for price to drive itself to the downside. Okay, for what we are seeing here with the breakout candle, there is not much of momentum, not much of price volume happening around this point. So we are not trading this, we are not taking it. At best, you want to wait. Price is very likely again to push to the upside. Somewhere in there is where you should be looking for your short entries back down. Okay, all right, why am I saying somewhere around in here? It is quite easy. Look at the previous price pattern that we had. It is more of a triangle formation. All right, more of a triangle formation with that high right there. This was a fake breakout. That was a fake breakout. Okay, now price broke out of that triangle. It is very likely to go for a retest. Okay, let me take out this line. It is very likely to go for a retest. If you are really understand what I mean, price is very likely to push back up to that area right there before coming back down. So that is the retest that I am talking about. So you should not be clicking on your sell button right here. At best, you want to wait at that point. Again, you should be able to use your Fibonacci retracement tool from the high of that drop to the low right there. If price retraces back into that zone that I was talking about, somewhere in here, you can see that we have more of a confluence point around that area. Okay, if you take the lower leg of that triangle, we should have a confluence point around there. Fibonacci retracement zone, any pullback into that area, you should be looking for short entries. Okay, all right, well, if you are bent in taking that trade, if you are bent in taking that short entry. Probably you are trading the breakout, a congestion continuation pattern. It might move in your direction, well, but as a rule of the thumb, we did not really get our preconditions based on this setup, so we are not taking this trade. Okay, it is better to miss than to miss your equity. Now let's move into the next pair, which is the American dollar against the Japanese yen. Well, I was following this pair over last week, and honestly, I was watching to see what type of price behavior we are trying to get in the daily time frame, because a price moved down nicely, and since then it has been swinging up and down. To me, I am seeing a triangle formation. Okay, right now the lower leg of this triangle, it is very clear, very obvious that we have a confirmation to the downside, but to the upside it is quite a bit confusing to know which one will serve as the best triangle leg for this pattern. We have this one here, which is the middle one that I am considering here to be the middle leg. It is a valid bounce point, and right here price has not confirmed that bounce, but last week we saw how price got rejected off that level, which of course sent a signal to me that this might be the next triangle leg. Okay, in the other hand, the confusion is coming from this point. If you try to draw that other bounce point there, where in fact might be the beginning of that triangle bounce, then price is likely to push to the upside again. Then somewhere in there we might see a rejection to the downside. At any rate, for the American dollar against the Japanese yen, you want to be absolutely careful going long around this junction of the chart. Price is very likely to bounce off that point and coming back down, so you don't want to go long around this area. Okay, you only want to go long if price successfully breaks above that point, but for now price is sitting below. This is a potential resistance point that you don't want to trade long against. Okay, all right, let's move on to the next one, the euro against the Japanese yen. This is a sister pair to the Swiss franc against the Japanese yen, so at any rate be careful here, avoid all long entries. Price might be facing some levels of resistance around that point. For now there is no clear hint, so we are not taking any trade here. We are waiting for a clear hint. We have our eyes in the intraday time frames, of course in the live broadcast room, to be searching for only short opportunities in the lower time frame on the euro against the Japanese yen. All right, next one, the New Zealand dollar against Japanese yen. Of course, price is very close to our high tension level. That level here we have analyzed last week. Price is very close to that level. For all of you who are looking for long entries, as we advise in the last weekend market analysis, well, you would have been profitable. For now, price is very close to that level of resistance, so you want to be searching for bounces to the downside. You want to be careful going long because price is challenging a heavy long-term level of resistance. Okay, all right, this video is already running too long. Let me just take the last pair and call it off, which is the euro against the New Zealand dollar. This is the daily time frame. Well, we are all looking for the trend collapse strategy here with this bounce and this one right here. I am not comfortable with short entries at this point. Okay, I am at any rate I am not comfortable at all going short in the euro against the New Zealand dollar. Remember, I told you that you have to really be certain about trend lines that have high qualities for you to trade off. Okay, now see how price gave us that. Let me actually shift my chart a bit. Okay, see how price gave us that bounce before this swing. All right, so this at any rate is an a higher swing to the previous one. Once you see that, there is bound to be problems in the future. This is supposed to be that trend line, okay, but then it is just lying too flat, so we are not going to be taking that. If you are talking about the outer trend line, trust me, this is the outer trend line, okay, this is the outer trend line. So if you are keeping this, well, you are only keeping it to for a reference purpose, just to be certain that there's a possible resistance level ahead. But I will not take any shot at that point for a trend collapse setup. No, I will not do that. Already we had a breakout pullback, a continuation pattern, which has of course failed, and right now momentum has shifted to the upside. So for the euro against the New Zealand dollar, you want to be careful. Price still has plenty of momentum to push to the upside, so you don't want to go short in this pair. In your intraday time frame, keep searching for long opportunities. Okay, all right folks, 34 minutes are gone. I am sorry, this is a pretty longer video. In the future I will try to make it a bit shorter, just that I really need to pass this message across, so you will get the analysis quite clear and better. This is pretty much all for this weekend market analysis. Hopefully we'll be having some daily market analysis within the week. If you have any questions or contributions, please feel absolutely free to comment or email us on our Facebook page. Please make your comments or click on the like button that are on this video. Thank you so much. I'll be talking to you again in the next weekend market analysis. Cheers and bye bye.